Hello and welcome back to All Things Money. I'm your host, David Blain. During today's show, we're talking about the Taxpayer Advocate's 2012 report to Congress. During the first segment, if you missed it, head over to the website, dlblain.com. You can catch up there. I spent a little bit more time than I wanted to on the introduction, so I won't go through that again, and let's just kind of jump right into it. The number one most serious problem identified is the complexity of the tax code. And these are some of these, not only is it the most serious problem affecting taxpayers, it's the most serious problem affecting the IRS. And here are some of the results of this report. It says that the complexity makes compliance difficult, requiring taxpayers to devote excessive time to preparing and filing their returns. Requires significant majority of taxpayers to bear monetary costs to comply, as most taxpayers have to hire preparers or purchase software. It obscures comprehension. There's an obvious one, leaving many taxpayers unaware how their taxes are computed and what rate of tax they pay. I see that all the time. People come in, prepare their taxes, and their eyes just glaze over and they have no idea, and you tell them, hey, you owe, $30,000 or $5,000 or whatever, and they just have no idea. It's so complicated. Here's a big one. It facilitates tax avoidance. Now, tax avoidance, let's talk about. Tax avoidance is the legal minimization of paying your taxes. Tax evasion is evading paying your taxes, so that's illegal. And then, of course, fraud is outright cheating. And so fraud and tax evasion are criminal offenses. Tax avoidance is a legal mechanism. And so what she says is it facilitates the complexity of the tax code, facilitates tax avoidance by enabling sophisticated taxpayers to reduce their tax liabilities. And that is exactly what we do, what other high quality CPAs out there do, is not just complying with the tax code. If you have a CPA that all they're trying to do is comply with the tax code, you're missing the boat. That what you should be doing is trying to minimize your tax. And because the tax code is so complex, it allows you, if you understand the rules and how to play the game, so to speak, it allows you to minimize your taxes. And that's the way both parties wrote it, Democrats and Republicans. Believe me, there's enough deductions and things written in there for all sides. It undermines the trust in the system by creating an impression that many taxpayers are not compliant and reducing the incentives for honest taxpayers to feel to comply. And this goes back to this whole class warfare thing, is the people on the lower end of the scale are taught and sort of hyped up by the media and the president that, well, the rich aren't paying their fair share. And of course the wealthy read about the earned income tax credit, and which, by the way, is the number one fraud in the tax system right now, is the earned income credit. It's not people keeping money offshore. That's legal. You're allowed to do that. It's not minimizing your taxes. It's not Warren Buffett paying 15%. The number one problem in the IRS for fraud is the earned income tax credit, which is a program where taxpayers get a check from the government if they're a low earning. And so you have people at this end of the scale think people at that end of the scale are all cheating, and people on the lower end think people on the higher end are all cheating. And so nobody has any confidence that anyone is paying the appropriate amount of tax. Once again, we're not advocating which is correct here today. If you listen to me, you'll know what I think. But the point is that nobody has any confidence in the tax system. So taxpayers, from those making nothing to those making millions a year, don't have confidence in the system, and it reduces the incentive for honest taxpayers to comply. It also generates the complexity of the tax code generates tens of millions of calls per year to the IRS, overburdening the agency and compromising their ability to provide any sort of coherent service. Now, one thing as I go through here and talk about this, we talk about what's called tax expenditures. And I've always had a problem with calling them tax expenditures because, you're talking about allowing people to keep their own money. You know, they went out, they earned it, whether it was capital gains or they went to a job or whatever. It's their money, and then they're required to send some to the Treasury. Well, and anything that reduces the amount you're allowed to send to the Treasury is called a tax expenditure, which, you know, it's government speak. It's ridiculous. But anyway, that's what they call it. So if I refer to them to tax expenditures, you have to forgive me. That's the way they're written. They're written in here. Okay. So here's the big results of this survey, or not the survey, but the report. If these tax expenditures came to about $1.09 trillion in fiscal year 2013. They're projected to. And individual income tax revenue is projected to be about $1.36 trillion. And so what that means is if they would eliminate all expenditures, meaning eliminate all deductions, all credits, all these things, and just you pay the rate. You know, if your rate is 15%, that's what you pay. There's no deductions, no credits, no nothing. They could reduce the tax rates by 44% and still collect the same amount of money. Okay, let's mention that again. If the tax code was simplified such that you just had a flat rate, I don't even mean a flat rate. You could have different rates for different people. We're not going to get into that right now, but if you just paid the rate that you were supposed to, eliminate all these other complex parts of the code, you could reduce tax rates 44%. So what that basically means is that the 10% tax bracket, which is the first tax bracket, instead of being 10%, you could reduce that, that tax bracket 44%, or take it down to about maybe 5.5%, 6%, and you would still collect the same amount of revenue. And so that, whether that's realistic or not, I don't know. I think it would be a good place to start. But the point of the matter is that it just shows the complexity and the web of all these deductions and credits and everything that essentially are almost equal to the total amount of money collected, and that you could drastically reduce the income tax rates if you got a lot of those things out of the tax code. Okay, well, coming up on our second break, when we come back, next segment, we'll continue talking about the Taxpayer Advocate's 2012 report to Congress. So for All Things Money, I'm your host, David Blain. We'll be right back after a few short messages.